In the next 12 minutes, you're going to understand why some of the smartest money managers on Wall Street are quietly positioning themselves around Tilray stock while publicly telling you to stay away. What I'm about to show you isn't in any analyst report. It's not in the news. And by the time most investors figure this out, the window will have already closed. This is the hidden truth about TLRY that nobody is talking about. Here's what nobody wants to tell you about Tilray. This company has been called everything from the future of cannabis to a complete dumpster fire. And both of those assessments somehow miss the point entirely. Because right now, in 2025, Tilray isn't just a cannabis company anymore. They've been quietly transforming into something Wall Street doesn't even have a category for. And that confusion is exactly what's creating the opportunity. See, when analysts can't fit a company into their neat little spreadsheet models, they do what they always do. They slap a sell rating on it and move on. But here's the question you need to ask yourself. What if their confusion is your advantage? What if the thing that makes Tilray impossible to categorize is exactly what makes it potentially explosive? Stay with me, because by block 11 you'll understand exactly what I mean. Let's rewind for a second. Tilray started as a pure-play cannabis company in 2013, and for years that's exactly what they were. Canadian medical marijuana, some recreational sales, the standard stuff. But then something changed. In 2021, they merged with Afria in a deal worth $3.9 billion. On paper, it looked like two struggling cannabis companies combining forces to survive. Most analysts yawned, but here's what they missed. That merger wasn't about cannabis at all. It was about acquiring Afria's crown jewel, a little company called Sweetwater Brewing. Yeah, you heard that right. A cannabis company bought a craft beer brand. And that was just the beginning. Since then, Tilray has acquired Montauk Brewing, Alpine Beer Company, Green Flash, and Breckenridge Brewery. They now control over 10 craft beer brands. But why would a cannabis company go all in on alcohol? That question has a very specific answer, and it's the key to everything. Now let me shift gears here because this is where it gets interesting. Forget everything you think you know about the cannabis industry for a second. I want you to think about prohibition, not cannabis prohibition, alcohol prohibition, the 1920s. When alcohol was illegal in America, there were still companies making money. How? They positioned themselves in adjacent industries. They made the bottles, the labels, the distribution networks. And the moment prohibition ended, those companies didn't need to pivot. They were already in position. They just added the product. Now here's the question that should keep you up at night. What if Tilray isn't a cannabis company at all? What if they're a prohibition positioning company? They've built a beverage empire with distribution networks, retail relationships, and brand expertise. The day federal cannabis legalization happens in the United States, Tilray doesn't need to build anything. They just need to swap out one product for another. But here's the catch, and this is important. Federal legalization might be closer than you think. Let's talk numbers, because this is where most Tilray analysis completely falls apart. If you look at their stock price over the past 3 years, it's brutal. Down over 70% from their 2021 highs. Institutional investors have been dumping shares. Short interest has been climbing. Every traditional metric screams stay away. But here's what those metrics don't show. Revenue growth. In their latest fiscal year, Tilray generated over $770 million in revenue. That's not nothing. That's a real company with real products on real shelves. Their beverage alcohol segment alone grew 30% year over year. And here's the number that should make you pay attention. Their cannabis segment is now less than 50% of total revenue. This is not the same company it was 3 years ago. The market is pricing Tilray as a failing cannabis company. But the financials show something completely different. They show a diversified beverage conglomerate with cannabis exposure. That's a very different thing. And that gap between perception and reality is where fortunes are made or lost. Now, I need to be completely honest with you here, because this is where most YouTubers would start pumping the stock and telling you to buy. I'm not going to do that. Tilray has real problems, serious problems. Their debt load is significant, over $300 million in long-term debt. They've been diluting shareholders with new stock offerings. Management has made promises they haven't kept. The timeline for profitability keeps getting pushed back. And let's be real about the cannabis industry in general. It's a bloodbath out there. Companies are going bankrupt left and right. The The Canadian market is oversaturated, and US federal legalization, while potentially closer, is still not guaranteed. Anyone who tells you Tilray is a sure thing is either lying to you or trying to sell you something. But here's why I'm still paying attention. Because the biggest gains in investing almost never come from sure things. They come from situations where the market has priced in disaster, but reality turns out to be different. And what's happening with Tilray right now fits that pattern almost perfectly. But here's the thing. Everything I just told you about Tilray's problems, that's all public information. Every analyst knows about the debt. Every institution has modeled the dilution. The market has priced all of that in already. What the market hasn't priced in is what I'm about to show you. And this is the part that made me do a double take when I discovered it. Because while everyone's been focused on cannabis legalization as Tilray's only hope, there's a completely different catalyst that nobody is talking about. It's not about weed. It's not even about beer. It's about a specific regulatory change that could happen within the next 12 to 18 months. And if it happens, it won't just help Tilray. It could fundamentally transform their entire business model overnight. This is the hidden opportunity that Wall Street analysts are either ignoring or don't understand. And I'm going to break it down piece by piece, starting right now. The catalyst I'm talking about is called Schedule 3 rescheduling. And if you haven't been paying attention to this, you need to start. In August 2023, the Department of Health and Human Services recommended that cannabis be moved from Schedule 1, alongside heroin, to Schedule 3, alongside medications like ketamine and testosterone. This isn't some fringe proposal. This is the United States federal government actively moving toward cannabis rescheduling. And here's why this matters specifically for Tilray. Right now, because cannabis is Schedule 1, companies like Tilray can't deduct normal business expenses on their taxes. It's called 280E, and it's devastating. Cannabis companies effectively pay tax rates of 70% or higher. But if cannabis moves to Schedule 3, that tax penalty disappears overnight. For Tilray specifically, analysts estimate this could add over $100 million annually to their bottom line. Not new revenue, pure profit that's currently being eaten by an archaic tax code. And the DEA is expected to make a final ruling on rescheduling potentially before the end of 2025. Now let's connect the dots because this is where Tilray's strategy starts making sense. Remember those beer companies they've been buying? Sweetwater, Montauk, all of them? They're not just revenue diversification, they're Trojan horses. Each of those brands comes with something far more valuable than the beer itself. Distribution agreements, retail relationships, shelf space in liquor stores and grocery chains across America. When federal legalization or even just rescheduling happens, Tilray doesn't need to build a distribution network from scratch. They already have one. They don't need to negotiate with retailers. They already have relationships. They don't need to establish brand credibility with consumers. They already have trusted beverage brands. Do you see what they've done here? They've spent the past 4 years building the infrastructure for a business that doesn't technically exist yet. And they've done it using a legal product, alcohol, as camouflage. Every other cannabis company is going to be scrambling to build distribution when legalization happens. Tilray will already be inside the castle. Now stop. I need you to really understand what's at stake here because this next part is crucial. What I'm describing is not a guaranteed outcome. It's a thesis. And there are very smart people who disagree with this thesis completely. Some analysts argue that beer distribution and cannabis distribution will never overlap, that the regulatory frameworks are too different, that retailers won't want to mix the products. Others point out that Tilray's management has overpromised and underdelivered for years. That CEO, Irwin Simon, has been talking about profitability being just around the corner since 2021. And that's a fair criticism. The company has burned through investor trust. But here's the counter-argument. Management credibility doesn't change the fundamental math. If Schedule 3 rescheduling happens, the tax savings are real regardless of who's running the company. If federal legalization happens, the distribution advantage is real, regardless of past broken promises. The question you have to ask yourself isn't whether you trust management. It's whether you believe the regulatory environment is about to change. Because if it does, the stock you're looking at today won't look anything like the stock 6 months from now. So let's bring this all together because we're approaching the moment of truth. You've got a company that the market has written off as a failing cannabis play. Stock down 70%. Analysts bearish. Retail investors burned. But underneath that surface, you've got a business that's been quietly transforming. A beverage empire that now generates over half their revenue. Distribution networks that span North America. And two potential catalysts that could change everything. Catalyst 1, Schedule 3 rescheduling, which could add over $100 million in annual profit through tax savings alone. The DEA could rule on this within months. Catalyst 2, state-level momentum toward full legalization, which continues to build regardless of federal action. 38 states now have some form of legal cannabis. The dominoes are falling. And Catalyst 3, and this one's the sleeper, potential acquisition target. If you're a major beverage company like Constellation Brands or Anheuser-Busch, and you want instant cannabis exposure the moment it's federally legal, who do you buy? You buy the company that already has beverage expertise, distribution networks, and cannabis operations. You buy Tilray. And this brings us to the hidden truth I promised you at the beginning of this video, the thing Wall Street won't tell you. It's not that Tilray is definitely going to succeed. It's not that you should bet your life savings on this stock. The hidden truth is this. Tilray is currently priced as if none of the catalysts I just described will ever happen. The market has given up on them, and that creates a specific type of opportunity that professional investors call asymmetric risk-reward. If I'm wrong about everything, if rescheduling fails, if legalization stalls, if the beer strategy doesn't work, the stock probably stays around where it is now, or drops maybe another 30 to 50%. That's your downside. But if even one of those catalysts hits, the upside could be 200, 300, or potentially 500%. That's the hidden truth. Not that Tilray is a sure thing, but that at current prices, the risk-reward math is dramatically skewed in your favor. You're not paying for any of the potential upside. It's all free optionality. And that's the opportunity that nobody in financial media wants to explain to you. So what does this mean for you? Look, I'm not a financial advisor, and this isn't financial advice. But if you're watching this channel, you understand that building wealth means thinking differently than the crowd. It means looking where others aren't looking. Tilray might never reach its 2021 highs again. Or it might multiply 5 times in the next 2 years if the regulatory landscape shifts. Nobody knows for certain. But now you understand something that most retail investors don't. You understand why the stock is where it is. You understand the potential catalysts. And you understand the risk-reward math. That knowledge is power. Whether you decide to act on it is up to you. But here's what I know for sure. The cannabis industry is entering its most important 12 months since it began. Regulatory decisions that have been decades in the making are about to be finalized, and companies like Tilray are positioned directly in the path of that change. The next video I'm working on dives even deeper into the specific regulatory timeline and other cannabis plays that might benefit, so make sure you don't miss it. Now you know what Wall Street won't tell you about Tilray. The question is, what will you do with this information? Drop a comment below and tell me, are you bullish or bearish on TLRY after seeing this analysis? And if this video changed how you think about cannabis stocks, hit that subscribe button because we're covering the biggest regulatory decision in cannabis history in an upcoming video. I'm counting on you to be here when that drops. Until then, stay unbanked.